But one thing that seems to be happening that I think is quite important is that the supply of physical silver in the COMEX warehouses is dwindling, and it's at record lows. I think 155 million ounces. And what you need to understand is that the COMEX itself doesn't have like a warehouse. They just have they just say, oh, this warehouse owned by JP Morgan or whoever, that is qualifies as a COMEX warehouse. So I think that's an important aspect of things. And I've noticed as well, I don't know how it's developing right now, but that open interest in gold futures is dropping a lot. Open interest means that the higher the open interest, the more the public is involved in the market. So it looks like people are not getting as involved. So yeah, and I've seen recently as well that the SLV, which is the ETFs for silver, I think it was last week and today as well, you can't borrow shares from the SLV. And why would you want to do that? Well, I think the bullion banks, they did that with PSLV a few months ago, if you remember. If you remember it, they were borrowing the shares to sell the SLV to keep the net holdings of SLV like neutral, because there are a lot of people buying PSLV, excuse me, and the trust had to buy physical. So if the swap dealers or bullion banks were able to borrow PSLV and sell it, it neutralized that increase, so they didn't have to buy physical. So they're trying now, I think, with the SLV, but the problem is they can't borrow. The lease rates for SLV shares has gone through the roof. And I think that squeeze in silver is going to continue. And today, as we speak, gold is tested 3,400 again in the spot, and we're close to 39 again as well in spot silver. Yeah, I mean, I follow that guy on X. I've communicated with him, and yes, I'm sure others will follow. I think he was the founder of a tech company and did really well, and he sold his shares or the company. So yeah, I think that would be that will happen, I think. And back in the 70s and 80s, the Hunt brothers were the main guys who went into physical silver. They started actually buying futures in the early 70s and taking delivery in the early 70s. And I suspect it's because when Nixon closed the gold window in 71, they knew what was coming in terms of inflation, but they couldn't buy gold, so they started with silver. But then they got over their heads a little bit, and the regulators and the Fed came after them. But when you have dozens of small, not small, of course, they're billionaires, but dozens of people with a lot of wealth, and maybe half of them start buying silver like that, it could make a huge difference. And I agree with Andy Schechtman. I've been telling people ever since I started following gold, when I bought my first Krugerrands in 02, I noticed that the markets behaved in a funny fashion, like they did the same thing at a certain time every day, which is unusual for markets. And then I discovered GATA, Gold Antitrust Action Committee, and Bill Murphy. And that's one of the things he said. Physical, you need physical, you need to take delivery. But on these exchanges like COMEX, unless you're a big fish, they're not going to make it easy for you to take delivery. I think 2 or 3 years ago, Rafi Faber with a few other guys tried to take a delivery of one contract of silver, which is 5,000 ounce bar, and they made it so hard they had to give up in the end. So yeah, it's definitely the kryptonite, taking delivery. And I think it was one of the reasons why they created because the bankers are behind these ETFs. they created the gold ETF. I think it was '04, if I'm not mistaken. And they created SLV as well, because that makes people not go for physical, because people want convenience and they don't want the hassle of buying. For some reason, people are think it's a hassle to buy physical gold and silver, which I think is crazy, but that's what it does. And I saw that today on X, someone came out that a company in Japan called Tanaka Precious Metals, they had a program where you could buy physical silver, I think, and keep it in their vaults. And now they're saying that as of December, or like when the program ends, you're going to get your cash settlement, not physical. So it's really difficult to trust all these ETFs and things like that. But in terms of manipulation, you're saying about the manipulation of gold and silver, some people might say, well, if they've been manipulating it, how come the price is going so much higher? And my retort, or my answer to that, is that they try to keep the public scared of going into gold and silver, because sometimes they come in and they smash the price and they create a lot of volatility. And I don't know if you've seen this, Jesse. Back in the 70s, there was communication between the London bullion dealers and the US Treasury, and also the State Department, about the coming legalization of gold on January 1st, 1975. And one of the dealers in London said, yes, the creation of a futures market should help keep Americans away from hoarding physical gold, because it's going to create a lot of volatility, and the futures market is going to dwarf the physical market. So that's how they do it. But yeah, I think people are waking up to the fact that the only real way to own gold and silver is to buy the real thing. And I think the billionaire there, Mr. Bateman, is an example of that. Yeah, silver, I guess the reason why I said that is because the last time, two times, well, the only two times silver went to around $50, back in the late 70s, early 80s, we saw almost a breakdown of the dollar system. We saw the US Treasury issuing bonds in Deutschmark and Swiss francs. They were called the Carter bonds. So that was like I think a signal that things weren't well, and silver, having been the money of the masses for thousands of years, reflected that. And the same thing, I guess, in 2011, we saw the European sovereign debt crisis in the countries of the south of the EU, like Portugal, Italy, Ireland, Greece, and Spain. I know Ireland is not in the south, but it was kind of in the same fiscal situation. And silver that year, when that crisis started, 2011, went to 50. So that's why I mentioned silver. The JGB market, that's the Japanese government bond. I've been covering it for years on my channel, that eventually all the debt and liquidity created by the Bank of Japan, and all the debt that's been taken by the government there, is going to come home to roost. We've been told by the Keynesians and mainstream economists that Japan has always been in a danger of deflation. But in the last 12 months, I think rice prices went up 100%. So the public, they're starting to feel the pinch. They know that deflation is really not there. And by deflation, I mean falling prices. I know that deflation is the collapse of the money supply, but things get confused a little bit. But now in Japan, the long-term yields for JGBs are spiking massively, and they could spike even more starting this week, because we had an election this past weekend in Japan, and the government lost its majority in the upper house, and that's quite serious because of the opposition. They want more fiscal stimulus. They want more tax cuts. And the Ministry of Finance and the Bank of Japan, they're trying to rein in all this money printing and liquidity. So this is throwing a spanner in the works. It could spook investors, and JGB yields could rise even further.